Hey, and welcome back to another video. Thank you so much for the support. I really appreciate it. And if you're new here, well, today's your lucky day. The reason on this channel, I share all the important things that I have learned over the last 5 years trading stocks and options. So to start off, I just got back from the gym and I had an idea for a video about setting a stop loss. I believe that is the number one thing that a trader should know before entering a trade. Any entry could potentially be a good entry because technically you don't know what's going to happen. So now, before we even talk about a stop loss, let's go to the entry. The entry is also important, of course. Even though the stop loss is more important, I believe, the entry is something that can also give you a bigger advantage, if that makes sense. So let me tell you what I mean. If I'm entering a trade, and I'm going to talk about my edge a little bit in terms of where I look to enter and exit, things like that. Some of my confirmations are the following. You got daily levels right here. So all the major levels from the daily. And then you also have moving average lines. And then you also have trend lines, right? Highs and lows. So let's say I'm only using one confirmation on a trade. That won't be as high of a probability trade as, for example, a trade that has critical levels and at the same time it's a moving average bounce. Now, the highest probability is when there's going to be all three, where you have a little bit of trend line action, a little bit of moving average, and also critical level. That's where the biggest moves usually happen. And there's other couple confirmations also. You have the overall market, SPY, NASDAQ, and then you also have, candlesticks and volume, things like that. So you don't need all the stars to align, but what you do need is a couple of reasons to get you into the trade. If you don't have those reasons there's nothing that's making you risk your money or enter the market other than emotion. And that's not good. You could get lucky, but snowball effect, even if you're lucky for 10 straight months, on the 11th month you give it all back. Because you entered with no plan and you entered with emotion. So in order to do this with logic, here's what you have to do. So the number one thing is you have to ask yourself, why am I getting in the trade? Why am I getting in? What's my reason for entry? Most of the time, we are operating out of emotion. We are operating because of FOMO. Stock ran up without us, so we say, screw it, I'm just going to get in right now. We operate out of hesitancy, should I jump in, should I not? You're always just feeling emotion. And that's just normal as a human. That's why it's super important to have a mechanical system that you can easily follow. Okay, so now let's go to Thinkorswim and see how this would play out on a chart. Here, for example, I pulled up Square on March 30th, which was on Wednesday. And if we look here at 115, 116, let's see what Square is doing. If we zoom in here on the 5-minute chart, we'll see I connected these two lows, and I call this an ST, by the way, supporting trend line, because it's technically support, it's connecting lows. Take a look at this right here. As soon as this red candle showed up, look what happened. Couple things. One, it broke the 5-minute EMA, and at the same time, it broke the ST, right? So those two, for me, are two bearish signals. Could potentially crash because of that, especially since it's happening at the same time. People that are watching the trend line, the bulls could bail out, bears could be waiting for that as a short entry, and then it could crash from there, right? So people that are using the moving average, those bulls can bail out, and then those bears can have that confirmation to short under the EMA, and then the same thing with the trend line. So when it's happening at the same time, you got all types of traders from all over the world using these indicators. So since you are using multiple things, that's what makes it kind of easier to have higher probability trade, right? As opposed to only just having one indicator. So now my reason for entry, specifically on this trade, is a supporting trendline break. I'm going to just say ST break. And then it's a moving average break, right? So here's the answer for where should I put my stop loss, right? Straightforward. You put your stop loss where your confirmations for entry are not there anymore. So if I entered because of the ST break, because of this line right here, then my stop loss, if I get puts, right, if I short right here, my stop loss should be somewhere above on the other side of the ST. So here or here or here. If I'm shorting because of the EMA, then my stop loss should also be somewhere higher than the EMA. I can't put it at the EMA because it could potentially reject there and keep going down. Now, another thing is this. If I put my stop loss here, then the only confirmations that I'm taking into consideration are the intraday confirmations on the 5 minute. So I'm taking into consideration the 5 minute EMA and the 5 minute trend line. However, the most important confirmation to me is the daily level. So if you zoom in here and you see here there was a top at 146.79. Now here's that level right there. So in my scenario, my best stop loss would be somewhere above this level right here, right? So here, or more specifically, maybe even there, because it'll be above this high too also. But if you put your stop loss here, that's fine, but it's a lower probability stop. It's okay. It's an okay stop. Just this would just be more high probability. Why? Because you have more stop loss bodyguard, meaning you have the ST, that's helping you out. You got the moving average, it's helping you out, and then you also got the level that's helping you out. But in my opinion, all these three stop losses would be fine. Also, especially considering that it's kind of like in a range. So if it goes here, most likely it will go there and there. But after understanding that, check this out. I'm just going to skip. Let's go to, I don't know, end of the day. Boom. Right. Never ends up even retesting that. So that's my short answer for where do you put your stop loss. You have to first understand where your confirmations are. What are the reasons for you why are you entering? And then put your stop loss. Exit when the reasons that you entered are not there anymore, right? So if you're going to the party because Bob and Jenny are going to the party, cool. Now if Bob and Jenny aren't going to the party, are you still gonna go? No. Your only reason you were going because Bob and Jenny was going, right? So that's how you got to think about it. If I'm entering a trade because so and so is happening, my stop loss should be where so-and-so isn't happening anymore, or that confirmation isn't there anymore. What tends to happen is that the stock would pull up and retest. Boom. It will go like right here. And then somebody will be like, okay, I'm going to just wait until it goes right back under the EMA. Please, 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 please go back under the EMA. Please go back under the trend line. And they're sitting there hoping, right? Forgetting that hope does not pay. Get out when your confirmations are not there anymore. It's as simple as that. I hope you enjoyed this video. Please share this with somebody that you care about that is trading right now or is trying to get into trading. I truly do believe that if they apply everything that I'm saying here and then, in all the other videos, they're really going to benefit in the stock market. So don't forget to subscribe, share, like, all the good stuff. See you on the next one.